Good morning, it's Harvey Jackson. We're just going to get through some of the news items here today. Saskatchewan crop conditions came out yesterday, and it's not a surprise that it looks good. It's a beauty contest. I'm not sure how they measure it, but and then just go through supply and demand just quickly as well, and maybe touch on the European supply and demand of oilseeds as well. So you can see that the beauty contest is still pretty good. There isn't a whole lot of areas that have any, low readings that are below fair at all, either on canola or spring wheat. A lot of green and very little of that in-between area, the fair and poor. I will say that the area over here is, I've got a few clients in there, and it's definitely does not feel good either on the canola or the spring wheat. Where it didn't run out, it looks reasonable considering the conditions. That's all I'll say. It's not great, but we'll leave it at that at the moment. So you can see here the percentage here. So you got your wheats and your canola. So conditions. So good to excellent. Yeah, you're a pretty high percent there. Spring wheat high percent, and the one that depending on which one of those maps you look at, there's actually pretty good growing conditions in majority, but the heat is actually maybe going to be the fallback, because you can see that there's a lot of heat, and it says up to 38 degrees. So you're in these areas here that higher above that 30 threshold here. We definitely could be starving those plants for moisture. If they had wet feet, you could maybe sustain some growth there, but that is not a good thing. So this is where Ryan Bonnet there, he's just posted a few different levels of what if scenarios here. So, and he's just basically taking the crop size from 42 all the way down to 39 using StatsCan, size of crop, and estimates on crush and exports. Everybody's got numbers that are a little bit different. I think it still could be over 14 plus, maybe just slightly, if you can get that 90 some plus crush capacity utilization, but still very tight. No matter what we do, we're going to be tight, even if we move even higher than 42. But I'm going to say we're very likely in this range here, 40 to 41. We're not going to see those yields that we had last year, I don't think, but anything's possible, I guess. But here's your EU rapeseed, and this balance sheet just changed yesterday as well. You can see that the total supply is shrinking as harvest is progressing down there. So, and this is where the information came from. It's from the EU Mars report, and their spring wheat is shrinking as well from just the last month. It is down 2%. Your soybeans down 5%. Sunflower, the biggest one is actually your corn. It went down 6%, and canola just down 1%. Ukrainian drones damage Russian grain export terminal on the Kerch Strait. So this, even though this is ramped up, it's still not pushing the market. It's actually holding up wheat values, but it's not pushing it up any higher at the moment. And this is where I would say that the adding of more countries and having the Middle East starting to defend themselves a little bit more. So there's a bit of a coalition here. Saudi Arabia unveils plans to multinational maritime defense coalition. It said 14 countries, including Turkey, Pakistan, Egypt, Sudan, used joint statement supporting a proposal coalition among the 6 Gulf Arab states, Oman, United Emirates, and we're not listed among the countries backing the statement. So but it's going to become wider conflict in that area if that were to just continue to go down that pathway. And it definitely is, as Iran keeps on hitting other countries. You can see the heat is still here, but you've got some other conditions, flash flood warnings. There's still lots of heat and everything here. So I just got a 7-day precipitation forecast, and there's only just a slight chance that there's going to be some just north of me here. And here's the just a 7-day forecast, and just comparing all the models. Every one of them, it does have some moisture going into the corn soybean belt. Now we just have to see how that's going to accumulate. So a quick look at the market. It's currently down at the moment, 765-ish on canola. Soybean oil is down a penny at 67 cents. Crude oil is up 2/3 of a dollar at 84.26. Diesel fuel is up again at $4.17 a gallon. Soybeans just slightly down half a cent, 11.88. Spring wheat down 5 cents at 7.06. Hard red winter is down $6.75 at 7.24. Chicago down 6.5 at 6.57. Milling wheat is down. Corn is down as well, a penny and a half at 4.44. And the Canadian dollar is just off a little bit from the last couple of days of rising. So you can see here we did punch through that 61.8 area and close below. And this does look like a slide. So I would say the next area that it could probably like stronger support is right there at the 728, I think. So it's these lows and these highs over here kind of matching it. Here's your rapeseed. Same thing. You would have to drop down to 507 as a catch for full downside here. Soybean futures, your medium term moving average just below here at 1173 would be the next level drop. That would be right at that 38.2 retracement value. And palm oil still just chopping away in the middle of that kind of trading range there. I'm just looking at diesel fuel. It's at near time highs. Gasoline is pulled off some, but still quite high. Canadian dollar's off a little wee bit. It's still trading in this upward trend actually at the moment. And thought I would just show you this upward movement of the U.S. one-year government bond rate yield, and then you look at the 30-year yield. We're making new highs for this year for sure. But then you look back, we haven't been there since, let's call it the early 2000s. Quick look at wheat. Here's your spring wheat, just trading just below your 10-day moving average at the moment. We'll see if we can punch through there and try to make get back to our highs that we've made there last week. Your Kansas wheat below the 10-day, so is the Chicago, currently at the 38.2 retracement value. Here's your European wheat, trading below the 10-day moving average, of course, and at 38.2 retracement value there as well. Just to back up and look, so if there was true problems over there with the wheat getting out of the Black Sea, this is the Black Sea problems. This is not where we are right now. Where is our supply versus that time that the world was with wheat at that time? I don't know. It's it's still a moving target as the crop is still coming in here. Estimates would be that it's still adequately supplied. This was a pinch point, and is that pinch point back on to